Welcome to the On Your Side podcast. I am Susan Campbell, right now joined by my friend, my coworker, senior investigative producer, Cody Lillick. Thank you so much for jumping into this with me.
Thanks for having me. I'm glad to be here.
So we are talking taxes today. It is about to be tax season. Lots of people have this on their minds. And I said, you want to jump into this podcast? And you said, sure, I could learn something. So here we are.
Yeah, I am a tax beginner. If there's not a help bot online or a Google answer online, I am clueless. So any online service, that's where my taxes live.
Yeah, so we were joking around about this, but you are kind of, I think, in the same boat as so many of our listeners and viewers. So I thought, yeah, let's do this. We're all going to talk about this together. There are so many changes every single year, especially this year. Mark Steber, Jackson Hewitt, Tax Pro, you are joining us. You're a great friend to the On Your Side podcast. We've had you on before. You've helped us walk through all the tax changes. Welcome. Thank you so much for being here with us.
Very exciting time, but one point of clarification, it's not about to be tax time. It is tax time. It can get no more tax time than right now.
Well, we are ready to go. First of all, give us the very quick 10-second pitch for why we need to do this sooner rather than later and wait till that April 15th deadline.
Well, first of all, it's your single largest financial transaction, and it'll be so for the next 30, 40, or 50 years. Yeah, 50 years. So you might as well develop some best practices on your single largest financial transaction. That's namely the government passing out $300 billion with a B dollars in tax refunds to 100 million Americans. That's what's going to happen in the next 30 or 40 days. You don't want to be at the back end of that bus. So pay attention to your largest transaction. Go get some of your $300 billion, and there's a lot of ways to get more of that money with all the tax law changes this year. So file early, get your money early. It's that simple.
So we have a lot of people in a lot of different places in life. You will notice, Mark, the last time we chatted, I was joined by Gary Harper, my coworker, who has since retired. So he's got a lot of different things going on in his financial life. Cody and I are in different places financially. I have 3 kids. Cody doesn't have kids. What do people need to know to get started?
All 165 million people have a different, unique set of circumstances. And that's what makes the tax code so great. Yeah, everybody bashes on it being so complicated, but that's the price of fairness. And you're going to see, sadly, more fairness, which sounds like it's a bad thing, but what fairness means is more ways for you to cut your taxes and keep more of your money. And it's that simple. Kids, no kids, retired, it matters not. There's something in the tax code for you, and there's a lot more in there than there was last year, and a lot of places to trip up. So get some help, whatever that is. Online, if you want to go do the work, Tax Pro probably makes a lot of sense for some people who just want the biggest refund they can get.
So where are we going to get tripped? What are the things that you see people making mistakes with often?
Well, I see mistakes every year with life changes because it wasn't on last year's form. So whether you retired or had children or started your side hustle, started trading in crypto, moved, or what have you, if it wasn't there last year, then you got a question on what do I do this time, and that can cost you money. Secondly, this year, as you mentioned, we had some of the largest tax legislation that I've seen in my 40 years. Now, that adds to complexity, which nobody likes, but it also adds a lot more opportunity for a bigger tax refund. So when you have new things like the new tip deduction, up to $25,000 in tips that are non-taxable this year, but you got to kind of do it right, and it's new, that can trip you up. If you have overtime pay, qualified overtime pay up to $12,500 in a new tax deduction this year on your tax return, but that's new. There's a new senior deduction if you're 65 or older, a new $6,000 per person deduction that's not the old senior additional deduction and not the old higher standard deduction. It's a new deduction, and you have to handle it carefully as well. There's a new interest deduction if you bought a car in 25 and it was assembled in the United States, a new $10,000 up to interest deduction, and again, you don't itemize, but there's a special place to do it and a special way to show it, or you might trip up there. Then there's the higher state and local tax deduction, higher child credit, more refundable child credit, and other changes that are beyond the scope of this call. But to suffice it to say, there's a lot to watch out for. Mishandle it. Here's the lesson for your watchers. The government's not just going to mail Susan and Cody more cash and, hey, you left this off. Here's $5,000 more. Leave it off, stays off. Do it right on the front end and do it early. That's the best practice this year and every year, but especially this year.
So where do we go and find these? Is this, you said, if you leave it off, it stays off. How do we know that we are going to get what we deserve to get back?
Well, I'd like to tell you life's fair and it'll all work out, but it's only as important as the effort you put into it. And a lot of people marginalize their tax prep to that 1 hour a day or 1 hour on April 15th. That's not the way to approach your giant tax return. And everybody's got a complex tax return. I've not seen that simple with the unicorn elf riding down the rainbow. That day is dead. Taxes are complicated, accept that. But that being said, you need really 3 prongs to make the best tax refund. One, you need to be engaged. You need to be engaged all throughout the year. That includes a mid-year kind of a pro forma checkup, a near year-end checkup, and then tax time checkup. You've got to be engaged and you got to be organized and know all about your life changes and your stuff. Secondly, and more importantly, you need somebody who's trained and experienced, both with these changes, other changes, prior changes, next year changes. A tax pro can help you, but if you want to do it yourself, prepare to do some reading and some learning, and that's a lot of learning. But you need to be involved, you need to have a tax pro, and you need technology, good technology. And technology can be expensive, but you need to have sophisticated software, sophisticated training, and sophisticated documents that most tax pros have to help you navigate the world of complex tax law changes. But it starts with you. You need to start getting your stuff ready, finding last year's tax return, other things in your journal about your life changes or new stuff that you're doing. Did you move? Did you get married? Did you have a child? Did you start your side hustle? You've got to be involved or you're not going to get all the money that's due you. I've seen it 1,000 times.
You are like the Energizer Bunny of taxes. I want to send you my documents and just have you do it. I feel like you'd get it done in a snap. I want to talk a little bit specifically about the tips, the no tax on tips, because I think that is something that affects so many people. What kind of documentation do we actually need to have if that's going to be something that we're claiming?
Well, it's a great question, especially in this year 1, 2025, what they call the transition year. Because it was passed in July, on July 4th, the IRS couldn't get all the employers for people who have tips, as well as overtime, as fully engaged on all the new rules as they wanted. Next year, we'll talk about next year, or even on this call, there'll be an easier way. There'll be a box, there'll be some new information. But this year, to your question, it's a hodgepodge of confusion on how you do it. What do you get? There's not a simple form. There's not a simple box. There's not a simple place on your W-2. You kind of have to know it when you look at it. And we've trained our pros at Jackson Hewitt to ask several questions, to get other contemporaneous documentation like pay stubs, paychecks, other information that your employer, because no two will be alike in this first transition year. And the IRS has put out a lot of guidance on what taxpayers can do and ask for, what employers should provide. But this year will be a little different than next year because of the transitionary nature. So I'll simply say this for you and your viewers. If you have overtime, collect all the information you can about your 1231 total amount. And if you don't have it, ask your HR department or look around or ask your coworkers. And then if you still don't have it, talk to a pro. They can tell you where to look for your type of business or your type of job and where that's kind of common to get that information. But you're going to have to provide a little more help this year. Next year, they're going to have a couple of boxes for overtime and tips. But 25, particularly complicated because it is a transition year and you're going to need to do a little bit more work, but leave it off. It stays off. The government's not going to add back your $22,000 of tip income because you had that. There's not a reporting mechanism that's standardized this year.
Well, and important to note, there are a lot of people who I know maybe don't acknowledge some of the tip income they have if it was a cash transaction or something. Yep. And this is just a reminder that all of that stuff needs to be reported. Any income, right, Mark?
Well, yeah, you may have Uncle Bob who told you there's a hobby rule or a de minimis rule or some nefarious $600 rule. No, wrong, incorrect. If you have $1 of income, and I've won many a bar bet on this, that's supposed to go on your tax return. Now, whether you put all that on there, that's a separate question on morality or accuracy or whatever. But the point is, yeah, it's all taxable. Now, what's new is this $25,000 deduction, at least on the tip part, $12,500 on the overtime, and then the interest on your car loan. Those are all new. So it's probably in your best interest, one, to do the taxes according to the law. But now you get these nice tax breaks. They can help offset whatever shortcut you think you were taking, which is promising you not going to help you long term, because a good tax return helps you in a lot of different ways, the least of which is when you go borrow money for a house or car, the first thing they ask you for is your tax return. The higher your income, the better your score. Same thing on student loans and all the rest. So you want an accurate return, one, because it's the law, but Second reason, you shortcut yourself on what your true value is and your earnings are when you need that information for other things, and there's a lot of other things.
The deduction on the car loans is capturing my attention just because lots of people have car loans. And I have talked to people, Cody, you and I talk about people who end up in kind of terrible car loans, some with bonkers interest rates. I mean, I saw one that was almost 30%. What do people need to know about claiming this deduction?
Yeah, there's a lot of misinformation. So on this particular, on a lot of these, really, I've seen some crazy stuff out there, on how this rule works on tips or overtime. But the car deductions in particular, one that's pretty simple, but suspect on a lot of other ways it's been done. Really simply, you have to buy a new personal automobile assembled in the United States and take your loan out in 2025 and the future. But you can't refi a used lease or any of those other funky things. Those do not work. It's a new car purchase. That's what it was intended for. And it's financing starting in 25 plus in future years. But that's where you get the $10,000 interest. Also, the second part that's misunderstood is many people think you have to itemize like you do for mortgage interest or property taxes. You do not have to itemize to take this new car loan interest deduction. It's separate and apart from everything else. So I'll simply say this. If you bought a car in 25, a new car, then you need to look at this deduction because it probably applies to you.
And is there a limit? So, say in, some of the student loan areas of taxes, there's a limit on how many years you can claim that. Does this apply in the auto interest realm as well?
Well, right now, the deduction counts for here, and I think it's all through 28. And then they'll reevaluate whether this was popular legislation or not popular legislation, and then that'll fall on our politicians. So I'll simply say right now we're talking about 25. And as I've often said to everybody, tax years are as good as the law for that year. And after that, we've seen retroactive law, we've seen prospective law, we've seen every kind of tax law change on the earth. But for now, and for the next 3 years, you're good to go. And then we'll have to reevaluate once the legislators get back in session and see which of these proposals were popular, which ones are non-starters, who's in charge, what do they want to focus on. Right now, it's a very good year to be a taxpayer. I'll simply say it that way.
Mark, I've got 3 kids, 3 of the cutest kids in the whole entire world, if I'm being honest. What kind of money can I get for them when I'm filing my taxes?
Well, I'll simply say there's a lot of good stuff in the tax code. Small business is the best part because there's a lot of benefits in there. The second best thing is having a family. For you, Susan, there's child tax credit. They raised that amount. They raised the amount that's refundable. You've got dependent care credit if you put your kids in daycare or even summer camp so that you can work. There's the earned income credit. Probably doesn't apply to you, but if you've got children and you're in a moderate income area, up to $8,000 in earned income credit if you have children. You've got education credits. You've got education programs, the 529s. Sky's the limit on tax benefits as it relates to families. I would tell you to talk to your pro about all the benefits that might apply to you. Now, some of these, much like all these tax benefits, can phase out for high-income earners, but you certainly should start looking at them to see what qualifies. And kids is a magic sweet spot for a variety of tax benefits, the least of which is the child credit, dependent care credit, education credits, just to name 3.
So much to think about. It is a little overwhelming because I think there are a lot of people, myself included, I feel like, my taxes are pretty regular. My husband has a job. I have a job. We each get a W-2. We do that. We file. Everything's fine. But you really put it in perspective of how many variables there actually are.
Well, and those variables change, Susan. One day you might be in this position, next year for a variety of reasons, and we've seen that over time, self-employed, laid off, got a raise, moved, and we're temporarily lower in income, and all the rest. Your lifestyle changes each year, and life changes, in my opinion, drive more tax complexity than tax law changes. Because you see those in the media, you see those on the news. But just because you moved to a new state, or you had this income idea, or you are self-employed part-time or full-time, you can really impact a tax return. And a lot of people just look at last year's and start keying that stuff in at April 15th. They leave a lot of benefit off. And that's unfortunate because there's no backstop to send you more money. So have a good pro in your pocket, even if you do it yourself. Ask that question. Ask that thing you saw on TV. Get the most money you can. And this year is a very lucrative year for all the areas that you might get some new benefit that didn't exist before 25.
Can I ask you about medical expenses? I think that is one of the areas of tax law that confuses people every year. Like, can I deduct this? what can I save, what's taxable, what's not taxable. Help us understand how our medical expenses are factored into this equation.
That's a good question. It's a good news, bad news, type of an answer. First, the good news. There are deductions for medical expenses. In fact, more good news in the big beautiful bill and even some others. There are even new deductions for your Pilates equipment, your reformer, other stuff that they say now qualifies as a qualified medical expense. So you add all that up. Now the bad news. The government many years ago thought that not everybody should get a medical deduction for going to the grocery store and buying some aspirin. So they really give you a haircut of 7.5% of your adjusted gross income. Think your total income. First test is 7.5%. If you make $100,000, they cap off $7,500 just to start. You only get to deduct the amount in excess of that. The second test is even harder. You have to itemize your deductions to take a qualified medical expense. So not a lot of people get it. Now, the other good news is if you have a significant catastrophic medical expense and you're in a moderate income, think retiree or what have you, those people jump to the front of the line in being able to take a qualified medical deduction. But that's kind of how they've arranged it. They don't want you to just be able to take every willy-nilly thing that's medical, even if it's kind of serious. You have to have a significant catastrophic out-of-pocket, not insurance, medical expense. Otherwise, don't worry about it. But you'll know it if you've experienced it. If you've got heart or some of the other catastrophic medical expenses, talk to your pro, keep every document, every expense, mileage, lodging, food, all the out-of-pockets. Then it becomes very beneficial. I've seen it life transformative on people who are down on their luck and had some medical complication, and now all of a sudden they get to deduct $60,000. It can help. But for most people, not so much.
Yeah, I mean, that deduction would change life, but your characterization of that is super helpful. If it's happened to you, you know it. This is something. I think that's super helpful because I think there are a lot of people who are like, is this doctor's appointment? What is it?
Yeah, no.
And so that's helpful to put that in perspective.
Yeah. And let me ask you one thing. We were talking about the big, beautiful bill. Here in Arizona, there's an effort to try to get a state version of that passed. And it's got a time crunch on it because we have state taxes coming up. You were talking about, file early. So what is your advice to Arizona taxpayers? Because we have an issue where we may not know answers on our state returns for weeks, if not a month or so. And, Republicans have their version. Our governor, a Democrat, has her version of what she wants to see. Would you tell Arizonans to file those federal taxes early, get that out of the way, and worry about Arizona once this gets solidified? What would you say to Arizona taxpayers?
Yeah, and Arizona's not uncommon. Many states didn't have their legislature in session. The ones that did, it's an economic issue because it is a lot of stuff in there that can reduce revenue to the states. So Arizona's by no means alone in trying to figure out how do we pay for it, how do we do it, do we take all of it, do we do none of it, do we bolt on to the Fed? So I would simply say this: it's a unique one-on-one decision. But I'll say this: you really should file as early as you can and not wait for some maybe tax legislation later. For two reasons. One, maybe it'll pass, maybe it won't. And secondly, if it does pass, I've seen this in the past where states say, okay, we got your return, we know what you put on your federal return, we'll just send you more money. So it also depends on how the state will handle it downstream. Because I can promise you, Arizona and no other state wants people to file and then have to amend, and then they got to deal with that whole big problem. They'll work out some logistics for taxpayers, but I have not seen where waiting, it might go better later, working out. Now, that being said, your situation's unique, but if you're waiting on a $5,000 federal refund, but you got to wait for 4 weeks, 8 weeks, 12 weeks till Arizona gets their house in order, that's probably not the best financial decision, but a tax pro can tell you about that. And much like Jackson Hewitt, we're monitoring the states on a daily basis on how close are you, what's the likelihood. And so a good tax pro, an Arizona tax pro, can probably tell you from reading our own internal communications, what the likelihood is and what the timing is. And that goes farther than Arizona. The point is very simply, it's a very fluid situation, but all the states know tax returns are going to start being filed on the 26th, and a lot of people are not going to wait. So the headache they prevent is in their best interest not to tell people to come back in April and then file a paper amended return or wait till April to file your tax return. That doesn't do anybody any good to put everybody on the back of the bus.
We're going to let you go soon, but I do want to ask for your prediction. I mean, are we expecting people to get a lot more money back? Do you have any kind of sense of prediction of what the average refund is going to look like for people who are owed a refund?
Great question, and we have spent enormous amounts of time, as has the world. I'll simply say it this way, and I won't dodge the question. If you are one of the people that are affected, you had tip income, you had overtime, you had automobile interest, and you're a senior, and if you're a senior who bought a car, who works at night for tips, and then you go to your day job and you have overtime, you're going to get a much bigger refund. The rest will depend on whether or not any of these touch you or whether some other life change touches you. If you had nothing change last year and you're not a retiree, and you're not an overtime worker, you're not a tip worker, you didn't buy a car, you didn't have children, then your refund should be up just because of the increased standard deduction and a couple of other increases in the reduced statutory tax rates. But if you're in any one of those buckets, or perhaps more than one of those buckets, you should not only do better, you should do a lot better. I'll give you a simple example. Say you're a senior and you've done nothing else but collect your dividends and your interest. You get a new $12,000 deduction. Say you're in the 30% tax bracket. 12 times 30%, $3,600 more to that senior couple who did nothing else different except take the new senior deduction. $4,000 for sitting there and nothing else changed. Same for tips. If you got $25,000 of deduction you didn't have before, and you're in a 20% bracket, even a low bracket, $5,000 extra. But if you're not any of those, probably status quo. But if you are into those, and that's a lot of people, I'll emphasize that, then you should do better, much better.
Okay. Mark, if people want to find you, more about you or Jackson Hewitt, give us some social media or websites to go to.
Well, I'm everywhere. You can Google me, Mark Steber, but our website at jacksonhewitt.com is the greatest place to start. We have these tips. We have frequently asked questions. We have checklists. We've got a little calculator. You can plug in some of your data. You know, we've got other videos on a variety of these topics on how to understand them. But mostly we have the little pizza map box like pizza companies have. You put your zip code in, up pops the map of offices near you. You can pop right on in and get your taxes done today if you've got all your documents, or you can make an appointment or just walk right on in and say, hey, let me ask you about Arizona. Do I need to wait? And of course, they're going to say, no, you file today and we'll fix Arizona. But the reality is jacksonhewitt.com, great place to start.
Thank you so much. This has been a fun conversation. We're talking taxes, and I've had a lot of fun. So, Mark, I appreciate your expertise and all of your advice. Hopefully, it means a little bit more money for people.
A lot more money for some. Go get your money. It will not happen automatic. It will not happen easy. You have to do some work, find a pro, get your money.
It is always so fun to talk to Mark, and I joke around. It's about taxes, but he's the most energetic, enthusiastic person, and he made me feel like ready, like I'm amped up. I want to go do my taxes.
You said Energizer Bunny. That exactly nailed it. I think he could probably talk about taxes all day, and it wouldn't get boring at all.
No, and he had some good advice. You started the podcast saying, like, I'm a total newbie. I feel so ill-equipped to handle this kind of tax season. Do you feel a little bit better about what's ahead?
I have more stuff to look out for. Like I have the base level of taxes. So, the W-2s inputted, that's already in. So now, what else can I look for? And this, gave me a long list of, things that I can look out for. Does this apply to me? Yes or no? And especially that Arizona question, because we are in one big, beautiful limbo now. So we are just waiting to see. Both sides say they want some sort of tax cut, but it's to what extent. So we will have to see what happens. But he did bring up a good point. If you're sitting on quite a big refund federally, you might want to go ahead and file now. So that's good for Arizonans to think about.
Yeah, grab your money, make it work for you in the bank account versus waiting. Mm-hmm. Love it. Thank you so much for joining me. This was a really fun conversation. I appreciate you being a guest host today, and I hope you'll do it again with me.
Yeah, thanks for having me.
The On Your Side podcast is produced by Brad Denny. Our audio engineer and editor is Todd Martin. Segment producer is Colin Stanton. And I'm Susan Campbell. If you have a problem you can't resolve, maybe we can. Send us a message through azfamily.com or our AZ Family mobile news app. Look for the On Your Side section and leave us a message. Thanks so much for listening to the On Your Side podcast. And if you like it, leave us a review. We'll see you next week.
On Your Side is on Good Morning Arizona every weekday morning at 6:45 and 7 o'clock, and every weekday evening on Good Evening Arizona at 4 and 5 o'clock. You can also catch it on Arizona's Family News at 9 on 3TV every weeknight.